saying that this is not a negotiation. And then again, Howard Lutnick, the Commerce Secretary, yesterday was asked point blank whether there would be any postponing because there was some talk of that over the weekend. And he said absolutely not. It's sort of obvious these have to go into effect while the president resets global trade. The president himself has been saying he won't strike any deals with China and the EU, were the two countries he's been most focused on, or the two trading partners, and saying that there was nothing that they could offer because he wanted to see the trade deficits reduced. So a big shift here. We will have to see if this is confirmed. I will say, obviously, a huge jump in the markets. This is what they've been hoping to see. But there is still the question of what happens 90 days from now. You can't erase trade deficits in 90 days. There's still a lot of uncertainty that will be left out there as we wait for what gets settled there and the sectoral tariffs still to come. So good news for now, still a lot more to come, guys. Maybe.
Yeah, Megan, again, so I just want to, we're trying to find out where this was said, whether it was on another network. It may have been a while ago, though, this morning. I don't know what you know. I'm just trying to understand why the S&P turned the way it did, at least based on the timing of the interview that I think Hassett had with Fox, I think it was.
Absolutely. We're doing the same thing. And the White House, the White House so far not confirming this. So we have to wait and see where this came from and whether he said it directly to a network. And our Eamon Javers is at the White House right now trying to track all of that down. So we will have to see. Maybe it went directly to the wire services, for example. If this was simply a continuation of the discussion we heard over the weekend, then it certainly doesn't mean any decisions have been made. I'll also flag, guys, we're going to hear from the White House just around 11 a.m. and then again 2:30 p.m. today. So more chances for the president himself to try to clarify whether he is in fact thinking about a delay or whether he's exactly where he was on Truth Social this morning and saying that he's in this for the long haul and urging people to just be patient.
It also gets into the question, and there was a lot of discussion about this weekend, which is who's calling the shots, who has the president's ear, who's making decisions, who's in the room, who's outside of the room. Clearly, Peter Navarro is a big influence right now, and maybe it's just President Trump himself, but where's Scott Bessent, the Treasury Secretary, who there's no, everyone I spent, there's no way he can be, he can be on board fully with this policy that is clearly going to take us into recession and question the credibility of our assets. So where is he, and where's Kevin Hassett, for that matter, who's also a well-respected economist?
Right. I was going to say the same, too. Scott Bessent and Kevin Hassett both have a long history of public comments not being fully supportive of tariffs. So I would say the more discussion we hear about some sort of a pause, the more discussion about negotiations and striking deals, to me, that would signal that the two of them are starting to have some influence. But think about Peter Navarro's career. He wrote the book called Death by China and has been updating it for years since. President Trump himself has spent decades focused specifically on China, but also on trade deficits writ large, which he sees as a negative on GDP and a negative for the U.S. economy, even though most economists don't agree. So I would say, regardless of what happens with this specific headline, this is a cornerstone of this administration's economic policy. And I wouldn't expect, even if we get some softening on these sorts of country-specific tariffs, because this is, of course, the most dramatic move we've ever seen from Trump, we don't know that that's going to be the end of it.
Yeah, and a 7% rally for the S&P in just over half an hour. Let's get to Eamon Javers with more on this. Hey, Eamon.
Hey, Carl, I was just in the West Wing here at the White House talking to a couple of officials who are very well plugged in on this stuff, and nobody here is aware of any plans for any kind of 90-day pause, at least right now. Officials in the West Wing are checking to find out if this is an accurate report, but no information and no confirmation, importantly, Carl, on any idea of a 90-day pause or consideration thereof by President Trump as of right now. I just talked to a couple of folks, as I say, in the West Wing. There's real confusion, I would say, on this point in terms of whether or not Hassett is talking about something that's about to be announced, is being contemplated, et cetera. So for right now, and things can change, but for right now, no confirmation of this idea of a pause on tariffs, guys.
And now we go back to negative.
Yeah, Eamon, it's not often you see a move like the one that we did, not associated with news, but I'm really trying to understand where it came from, when it was said, if it was said, how it was said. Hassett was on, but he was on earlier this morning, I think, in the 8 o'clock hour on Fox, and we had the move happen at around 10. Do we know if there was something else said somewhere else, or I don't know. I mean, I guess I'm just trying to understand this, because this was a dramatic move. Obviously, we're giving a tiny bit back of it now. Well, actually a lot. We were we soared on the S&P briefly.
Yeah. David, that's a good question. I don't know where this came from. I'm seeing here a quote from Hassett on Fox saying, I think the president is going to decide what the president is going to decide. That's not a definitive statement.
No, that was the same thing he said yesterday.
Right?
Yeah.
So
it also doesn't
is this
jive
a
at all
case
with
of-
what the president has been saying this morning on Truth Social or last night on the plane.
Or what Peter Navarro said, for 15 minutes on our air this morning, right?
Yeah.
I mean, all the indications have been from all of the administration officials that they're willing to hang tight here. They're not blinking. They're not backing off. And like I said, when I asked officials here in the West Wing just, a minute ago, whether or not there was any consideration of a 90-day pause, they said they hadn't heard that. They don't know what that is, and they'll get back to me, basically.
All right. Well, this
I think it also
has been an
speaks-
extraordinary 10 minutes in the market. Well, let's call it about 20 minutes in the market on what may not be actual news, guys. Unclear.
It also speaks to, I think, what we hear goes on inside the White House, this dynamic, and we've heard this before. Like, there are a lot of ideas out there. There's one decision maker, right? And same with the reciprocal tariffs leading up to it and how they came to that formula and everything else. And, lots of ideas being thrown out there, lots of opinions around this.
The other thing, Sarah,
market's going crazy.
The other thing, Sarah, I would say is it does seem to suggest that the market is on a hair trigger waiting for the president to blink here, right? And any report that indicates that, they're ready to jump on that and they expect it to happen. But again, no indication from here that this president is blinking, at least not right now. I'm going to go back inside and see if we can clarify more detail on sort of where this came from.
Eamon,
and what the
I'm going to take it from you at this point. I mean, you're there, you're obviously reporting, you have great sources. If they wanted us to know there was a 90-day pause being considered, I would assume they would make sure we knew it.
Yeah, I mean, they can tell me at any time. I'm right here.
Okay. All right. All right. Thanks, Eamon. Well, we still have Jeremy Siegel standing by. What do you think of all this, Jeremy? Fascinating, huh?
I don't know if someone was long and said, hey, I'm going to send a rumor out and get out of this market. It also shows you, there are a lot of short sellers, and boy, a rumor like this, they got to cover. Also, we don't know, was that just reciprocal? If it's going to happen, which we don't know, is that include that 10% base, or is it just the so-called reciprocal tariffs? That's certainly also on news. I mean, obviously, the market wants that sort of relief. I certainly most hope that Trump takes it. But again, I'm very confident in the long-term growth of the U.S. because this is a human era, not a structural area about capitalism, free markets, or the stock market. It's a policy mistake. And that can be cured and will be cured in time.
Jeremy, thank you. Jeremy Siegel, obviously Professor Siegel, with us for some very interesting moves in the market. If you're just joining us, of course, we started the session right near the lows, although off where the few.
Folks, this is absolutely nuts. This is absolutely crazy. I don't even know where to begin. That's about a 10% swing in the market from the lows to the highs. We were actually at one point green on the day by 3.5%, close to 4%. I'm reloading the portfolios and they're swinging by 40, 50 grand. This is insane. I've never ever experienced this level of volatility in this short period of time. I've obviously seen a lot of volatility in longer time frames, but in such short periods, we're talking minutes, because if you consider the market cap of the S&P 500, and you consider this entire move took us up over 8.5%. This is trillions. It just feels like everybody, the hedge funds are by their seat, by their computers, waiting to hit the buy button. Literally waiting to hit the buy button. This is unbelievable. If you consider $50 trillion as the S&P 500's market cap, and 8% is $4 trillion that just got flooded into the market here in that time period, and then now are quickly getting out. Are, again, 4.5% volatility in 12 minutes. Not even 12. That was a little bit shorter. So this right here was 6 minutes. 6 minutes. 4.5%. Is this the S&P 500, or is this some kind of stock that we're looking at? This is insane amounts of volatility. Oh my God. I've honestly, in such short period of time, I have never seen this. I've literally not seen this. And this candle right here was the big pump for the market. It was a 4% for the NASDAQ. Oh my God, unbelievable. I think we're going to hear some news from Washington at around 11 a.m., I think, is going to be the time. And boy, I had to come back live. I was like, what is going on here? Looking at the markets, then immediately, our Discord is like firing off right now. We've got so many people engaged in the Discord. My God, I wonder if there was a way to go live on Discord. But my God, this is just crazy. And it just also speaks volumes to how, I mentioned earlier in my previous live stream that if there's any kind of negotiations, any kind of agreements, we will see the most jaw-dropping rally. And I think that is testament to that. That is testament to that because we already got a little taste. We got a little glimpse of what that's going to look like if we actually get some kind of agreement, some kind of negotiation, some kind of pause. And it all comes down to who's going to blink first. And China has more leverage. And look, they're both equally dependent on each other, one more than the other. But Trump certainly has to come to an agreement and has to read the room, has to read the temperature of the market here because the markets have spoken. They have literally spoken by this significant wealth erosion. And, it is just gearing up for when the hedge funds, when the big money starts to come in. And as I mentioned in my previous updates and videos as well, if you position yourself in a situation where you are already in and then the big money lifts all tides, as what we just tasted for a little bit, those rallies are going to be jaw-dropping, as opposed to by the time you wait for confirmation, right? Because a lot of people were saying that, I'm going to wait for an uptrend. I'm going to buy into that uptrend. Imagine 8% was just missed out right here. Of course, we're coming back down. We're rolling right back down because we don't know if this news is actually correct. But this is what you are kind of risking of losing permanently if this were true. If there was actual confirmation. So as I said before in my previous updates, the risk of buying is, for me, worth taking over the risk of waiting, because risk of waiting, you just don't know what's going to be coming out when the bottom is going to be in, or what kind of negotiations are going to take place, because then a 10% rally in a span of 15, 20 minutes is crazy. It's just insane. It's jaw-dropping. I mean, I've never seen this before, because $4 or $5 trillion are being flooded back in and out of this market is something. And for 1 second, I was like, okay, I did a video over the weekend calling for 4%, 2 back-to-back red days, and third day rebounds are very strong. For a second, we were like, okay, this is finally happening. We might actually be green. And then we were green for a very, very brief moment. And then, of course, we sold right back down. And we're flat right now. We're very flat. So markets are on edge right now.
Is it designed to raise revenue simply, and that's really what it's about? Or is it really designed to lower barriers? I don't know.
And for right away, just for this street already, 5 to 7% cut to numbers. If right now they announce the deal, you'd already cut numbers just based on the uncertainty.
What if they don't announce a deal? What happens to the earnings of Apple?
Well, first, I don't think any company gives guidance on the calls, but I think Apple, if they didn't, you could be looking at 10 to 15% cuts. If this continues for months, just given the cost structure, then you start to look for a lot of these. You could be looking at 20, 25% cuts across the board.
On earnings, on EPS.
On earnings and the EPS, just given the actual cost structure. And then it goes to, let's say, on software, where we're more bullish cybersecurity, the self-fulfilling prophecy, given uncertainty, data center, AI revolution, you could cut 15, 20% of that demand right now just based on the uncertainty. And that's why the sad thing, as someone that's such a supporter of U.S. tech for decades, is that what this has essentially done is cut U.S. tech at the knees. It would be like in a baseball game, me coming dugout before the game, like, okay, you're not going to have a catcher. You're not going to have a shortstop and no left fielder. Good luck. You should have a great game. But 3 years from now, I'll get you a catcher or a shortstop. That's the problem.
Right. The other thing in your note about Tesla is the political risk that Musk, you say, has introduced and is going to result in the loss of the future customer base. But that's been going on for a while. So what was it that changed your view on that front?
I think it's because our view, and we've talked about it, step back, balance it. Doge being CEO of Tesla, he continues to go forward and forward. And my view is that 20% demand destruction in Europe, 10%. I'm talking permanent destruction in the U.S. As one of the biggest supporters of Tesla, it's basically you're yelling and basically telling whether it's Musk and the board.
As well.
This is the time. Because if you don't do it now, then ultimately you risk permanent brand destruction that I believe changes the Tesla story.
While you're here, Dan, let me just take a quick break and get to Eamon Javers in D.C. again. Eamon?
Spoke to Caroline Levitt, the White House press secretary, on the phone just a short time ago, and she tells me it is quote unquote fake news that the White House is considering a 90-day pause. So the White House pouring cold water on this idea, wherever it came from, that they're considering a 90-day pause on tariffs, saying that the president is committed to his tariff regime, and any reports that he's considering a 90-day pause are quote fake news. That from the White House press secretary on the record just a short time ago to me on the cell phone here as we try to sort through where this came from and why it is that the market became convinced that might be a possibility. The White House saying it is not a possibility, Carl.
So, I mean, we're at this the standoff then, it feels like, between the markets and the president. It's like this weird game of chicken, right, of who's going to blink. And clearly the White House is not blinking.
White House is not blinking. Clearly, the market wants the White House to blink. That's why you saw that jump on a kind of a speculative thing about what somebody might have said. But clearly, the White House is not blinking. All the speakers from the White House, whether it's the Commerce Secretary, Treasury Secretary, Trade Advisor, the president himself in social media posts, all indicating that the president is committed to this tariff agenda and is not backing off, despite the market clearly desperately looking for a kind of a ray of hope here that he might do exactly that. And one of the things we're going to have to figure out is sort of where this report came from on social media and how it moved the market to the extent that it did just over the past couple of minutes, because it's clearly not true from the White House's perspective. And if you look at the transcript of what Hassett said, it seems to indicate that he didn't say a 90-day pause was being considered. So was something lost in translation here, or were some folks playing sort of deliberate games on social media to try to move the market? The market clearly moved on something, guys.
Well, this was a wire flash ad. I mean, it does look like they're going back to what he told Brian Kilmeade on Fox this morning. Eamon, Kilmeade, would Trump consider a 90-day pause in tariffs? Hassett, I think the president is going to decide what the president is going to decide. I mean,
right. It's not
your best guess as to whether or not the wires tried to reheat that conversation.
Yeah, I mean, you could be parsing that very sentence there, but that's Kevin Hassett saying, who knows, right? That's not the president. Kevin Hassett saying the president's going to consider this pause. That's Hassett just punting on the question, basically, and moving forward, because all the White House advisors are in a position here where they know what the president's intent is. They know the agenda here on tariffs and how important the tariffs are to the president, but they also know that there are giant financial pressures on the whole system right now, and the president may change his mind at some point, who knows, in the future. So they don't want to kind of leave that possibility totally off the table, even as they're signaling that the president is full steam ahead on this.
Eamon, thank you.
You bet.
Eamon Javers. Dan, just to wrap up with you, we didn't get to Tesla, which you've also obviously are concerned about for any number of reasons. Elon Musk, perhaps more outspoken than any other CEO, although he really didn't say too much, but he did go at Peter Navarro. I gotta believe he's concerned, and deeply so, about Tesla in terms of his own manufacturing, how much they have to import for parts and things of that nature. But, let's move beyond the political side of the Tesla equation and just what the tariff side means for the company.
Yeah, and what the biggest worry is in China. I mean, in terms of more and more, given the retaliatory that we see, you'll see more China domestic by BYD, NIO, and others. And then you look at ultimately what this could do to their cost structure. And my whole worry with Tesla is that this now is turned into a life of its own. And the tariffs, ironically, become a bigger and bigger headwind for Tesla, especially when you start to look at the China market and you look at everything BYD is doing. And that's why, this is really a perfect storm between the political brand tornado F5 that he's created, along with the political symbol, and now the tariffs. That's why it's a dark day. But the reason that we remain bullish is because of autonomous and robotics and the future. If it wasn't for that, we'd have to downgrade the stock.
The future of manufacturing, autonomous and robotics. Yeah. Okay, thank you, Dan.
Thank you.
Dan Ives, for being with us as we watch this breaking news. Look, the Dow is now heading south again. We're down 923 points. It briefly went into positive territory. It was recovering before this sort of erroneous headline on the wires that Kevin Hassett said the president is considering a 90-day pause. Our Eamon Javers just reporting the White House called it fake news. And guess what? We sell off again. NASDAQ down 1.8%. Let's bring in Steve Leisman, who's got additional color as economists increasingly, Steve, are moving into the recession camp the longer these tariffs last. And it feels like they're lasting now. The White House is not giving any indication that they're ready to negotiate any sort of off-ramp.
Yeah, and I think, Sarah, I've tracked down the source of this, as the White House calls it, fake news headline. There was an interview with Kevin Hassett this morning with Fox News. He was asked about a 90-day pause. And guys, I think we have a full screen here. If not, I will read it to you. The question is, will you do a 90-day pause? Would you consider that? And Hassett's answer, yeah, I think the president is going to decide what the president is going to decide. So it seems to me, I don't know if there was some other source of that. That was the source of it. Certainly, if Fox News thought it had some kind of scoop, it didn't know it because it wasn't on Fox News' website. It wasn't in any of their socials. That seems to be the source of it. So Hassett is not saying any of that. And he goes on to talk about the idea that there's lots of negotiations going on. But as you pointed out, Sarah, yesterday, his top lieutenants, Bessent and Hassett, along with Lutnick, came out, said there's really no movement at all. This morning, Navarro on our air, no movement at all. And now this 90-day pause thing, at least if it's some other source, I don't know. But if it's this source, there is no comment on a 90-day pause. And you're right, Sarah, guys, there's just one full screen I'd like to pull up from what I had already originally planned to do, which was, this is a flash Fed survey we did. It shows that 56% of our respondents believe, or 56% probability or average probability of a recession. That 33-point jump since January is the largest we have ever recorded in the many years we've been doing this. And there's the Fed's dilemma, Sarah, you know it. The outlook for GDP down 1.7, the outlook for CPI up about a percentage point.
It's just one of those games, what's that game called? When they put like 10 people in a single line and then one person says something in someone's ear, and by the time it reaches the 10th person, it is something completely different. What is that game called? It feels like a game of that, because this is completely paraphrased to the next level. The next level. By the time it actually got out, it was as if it was confirmed for this 90-day pause. The Chinese whisper. Yes, that's the game, or the telephone game. That's what it feels like. And this is so crazy, this entire volatility in this market. Just unbelievable. Absolutely unbelievable. And it feels like a big social experiment in this market where people's money, actual money, is on the line. And we're going up 6.5%, 7% in a matter of 5 minutes, which is, if you do the math, that's $4 or $5 trillion coming into the market and then leaving the market. Just imagine what kind of volumes we're dealing with in terms of trading activity in a span of 10, 15 minutes. Unbelievable. Unbelievable. Never seen anything like it. Probably the craziest hour of my live trading or investing here, just doing this live stream. Craziest hour. Probably for all of you, because I don't think anyone's experienced this level of volatility. Unbelievable. Absolutely unbelievable. And again, we'll hear more about this, but it just gives you a little bit of a glimpse of what is possible. But yeah, the White House officially calling it fake news, and Trump has no plans. There's no administration plans to put a pause on these tariffs going into effect on Wednesday.
Lousy inflation data, if you take it literally. So then you have to ask yourself the question, when does the Fed feel like there's an all clear to cut rates because it feels confident about the inflation outlook? The market's looking for rate cuts as soon as June. I think June is further than 6 months away.
The other thing, Steve, I wanted to get you on was your post over the weekend speaking of employment and manufacturing, is the number of manufacturing jobs that we might be poised to lose in the event of a recession, even though this entire policy is all about bringing manufacturing back.
Yeah, I'm sorry, I didn't have the chart available. What I did, Carl, was I looked at the manufacturing job loss after the last 5 recessions. It averages about 10% year on year, whereas the rest of the private sector, minus manufacturing, loses 3.9%. So 3 times as many jobs lost in the typical recession. What does that mean? It means that if we have a recession, and that's not a foregone conclusion, it's the odds-on bet of our forecasters. If we have a recession, you could lose 1.2 million manufacturing jobs on average, and just 500,000 if it's a moderate recession for a moderate manufacturing job loss. I know we have to go, but it would be it's the definition of cutting off your nose to spite your face, Carl.
Steve, thank you. Steve Leisman, as we take a break here, take a look at give us an intraday of S&P or NASDAQ or Dow. You'll see a giant peak in the middle of this morning session. You can call it Mount Hassett, although we now know from the White House that this was not a discussion about pausing tariffs for 90 days, except for China. VIX pretty much unchanged from prior to that headline, around 50. Stay with us.
Absolutely wild. Crazy volatility here. And so somebody asked, Vitrovia, I think asked what's going to be the point of buying if there's a 90-day pause. I think it opens the doors to a lot of negotiation down the road. And a lot can happen over the next 90 days. A lot of agreements can be reached. And I think the magnitude of these tariffs as well as the duration of these tariffs is what's causing a lot of uncertainty, right? From day one, from the April 2nd announcement, because they were going to be implemented in 1 week. So 1 week is not enough time. It's a very, very short period of time. And the tariffs amount is also pretty high. So combined, both is what's causing so much selling pressure in the market. So 90-day pause is obviously going to, release significant amounts of opportunities for negotiations. But then, of course, it's fake news as of right now. We have no confirmation if this is, we have the confirmation, but we don't have any outlook on whether this is going to be back on the table or not, because it's being considered, but right now there is no confirmation about it. It's fake news, basically. Yeah. So is the pause news real? No. So Riley, it is not. The Washington administration basically confirmed that it is fake news. It is not real, and we pretty much gave back the entire pump that we had. But like I said, this level of volatility, I don't think I've ever seen that before, especially at this magnitude. You can see the markets going up a little bit or going down on some news, but it just goes to show how important this is, and it also goes to show how much of a shift this will do to the entire world, because this will lead to a big reset if there is no agreements or no negotiations with regards to tariffs. And it also validates, some of the things that we have talked about earlier, that if there is an agreement, if there is a negotiation, we will see the most jaw-dropping rallies that we've ever seen before. It would be just an insane amount of buying pressure coming in. And you can see this was not retail. This was certainly not retail. This was not, your small investors buying. This is big money flooding into the market. This is because right now, what we have seen over the last 3 to 4 days is risk off. And by risk off, I mean investors' appetite for risk has completely gone. And what that means is big money, institutional money, because they're the ones that are actually moving the market. They're the ones who actually move the market on a very, very large scale. They have gone, right, to cash and bonds because they've looked for safety. So they are no longer in equities. So, my philosophy or my thesis has always been, okay, I want to position myself in places where I can be, where eventually once the dust settles, once there is a risk-on shift in the market and institutional starts to come back in with violence, with this surge that we're seeing, it'll lift the entire market very strongly. And so what we're seeing right now is there's no institutions in equities, but if they do come back, this is the kind of market rallies that you'll see. This is, 6.5%, 7%. Again, mathematically trillions coming into the market and then leaving the market. So institutions are very, very much on the edge of their seats, waiting for a negotiation, waiting for agreements, waiting for something that is going to move us back to where we were, and they're back risk on. They're literally back risk on. So it's never been more crazy times in the market where you've got a very clear understanding and idea of what's actually happening, what needs to happen, and where we currently are. So insane. I mean, absolutely insane. And if you're asking yourself this question, oh, should I be buying, or what should I be doing? The only question you need to ask yourself is Trump going to come to an agreement with China and with other countries on tariffs? That's the only question. That is literally the only question. Because if he's not, then we are headed down this rabbit hole of isolation and higher prices and a potential recession, and just a lot of these countries becoming trading partners and isolating the U.S. If eventually there is some kind of agreement, negotiations, then markets are off to the races. Then no longer anybody will be bottom fishing. We'll be trying to keep up with these rallies. We will literally be trying to keep up with this market momentum. So we're back green. I mean, I'm having to change my title. I'm not changing my title anymore. I've already changed my title twice in this live stream, from a market crash to a market pump to a market crash again. And it's wild. Absolutely crazy. I need to get some dinner. So thank you so much, you guys, for joining. We'll see what happens. Put a question mark? Yeah. Let's just do a question mark. Market crash or rally? Just going to put a question mark here. I think that's fine. That's going to cover everything. Whoever's watching it hours later is going to be like, okay, he's covered both ends. All right. So thank you so much, everyone, for joining. Appreciate you all. Be on the lookout for the news. The news flow is constant, by the second, by the minute. So
I'm really surprised in a way as to where the market is pricing in these rate cuts, but also sort of understand it, because that's been the Fed's track record going back the last few years, if not decades.
Right. So now we have the situation where the Fed is a little bit handicapped. We have global, I mean, you're a very global guy. So let's just talk about what's happening overseas. Hong Kong falling 13% overnight, the worst day since the Asian financial crisis. What's going to happen to global growth?
No, I mean, obviously, global growth is going to take a hit. But I think that at the end of what's going on here, and something we've spoken about as well, is that the rest of the world is laser focused now on trading without America. So what's happening there is that they're sort of expediting their trade deals of trading with each other, as I've sort of written in the past as well, that if you look at the 10 fastest growing trade routes in the world, only 2 now involve America, 5 involves China and other countries. So the world is moving on, but obviously in the short term, everybody gets hit. But this is a very different kind of market reaction and even downturn that, as you know, that this time, even after the carnage in the international markets over the last couple of days, the US market has really underperformed, and the dollar, in fact, has weakened through this all. So these are already 2 very different reaction functions to what we've seen in the past. And you just pointed out the treasury yields as well. I think that's a great point you made, because the sensitivity analysis that we had done some time back showed that if there is a US recession, the deficit will widen to 8 to 9% of GDP. Now, what sort of yields should that bring about? Higher yields, I would imagine, not lower yields. So this is a very different environment, and looking at history here may be quite misleading, as we're already seeing in the market's reactions.
Rishi, I'm interested in, somehow we're going to hopefully get some resolution, quote unquote, on what the tariff rates are and what negotiations look like. But I am curious to know your thoughts about the scarring of credibility to the U.S. and what that does to its ability to draw capital from around the world.
I think it's very significant, partly because, Carl, we went into this with the U.S. being the most overhyped, overowned, and overvalued market in history relative to the rest of the world. That never before had so much capital flown to the U.S. 80% of all flows into the stock market globally went into just the U.S. market this decade. So there's a lot of unwind of that which has to happen, and a lot of that capital came in unhedged, expecting the dollar to appreciate. So that's why, that was something that we discussed was the mother of all bubbles, and that bubble is now being pricked. But this credibility damage is going to last, And I suspect that over the next few years, the US stock market and US assets are going to underperform no matter how this tariff drama is resolved.
Rashir, thank you very much for weighing in. I will note that, Carl, even though we have seen stocks sell off again after the White House shot down the 90-day, asset headline, if they're not at the lows, they're certainly, it's not as bad as it had looked. The Dow is only down 350 points, so, there's something there.
Nasdaq's up.
And even heading into that headline, we were off the lows. Treasury yields have turned around. Like there's definitely something happening, whether it's just they got overdone or what?
Yeah, we'll see. VIX now with a 4 handle instead of a 5. Let's bring in Bapasani.
So what's happening is it stopped going down, okay? And that's the good thing. And I think while the market may move on this particular news, it moved on, there is some vague hope that the Europeans might be offering to negotiate somehow. I think that's what the market's clinging to right now. That's the vague hope here and why we stopped going down. But the damage has already been done. You guys have been talking about strategists reducing estimates. I've been looking at the analysts. These are the bottoms, not the top-down people, the bottoms-up numbers, and their numbers have been cutting rather dramatically in the first quarter. I look at some of these material stocks, Freeport, Nucor, Dow. These numbers are getting cut dramatically in the last few weeks, and you can see look what happened to Freeport over here. Freeport, 42 to 30 in the last couple of weeks, and the estimates have been dramatically cut on higher costs. Nucor went from 123 to 105. It's way down the last few weeks. So the material estimates have dramatically come down. This is one sector where there's really material movement in the bottoms up strategist move. There's Nucor. It was 123 just a few days ago. Now it's 105. If you look at other sectors like consumer discretionary, again, I look at analysts, not so much strategists. These are the bottoms up people who actually do the daily work in the market. You look at stocks like Ford, just absolutely the estimates are collapsing on Ford. We're negative here for the first quarter. It was dramatically higher, and Ford is dramatically lower. It's like that's like close to a 4-year low on Ford. We're not that far away. Other big names in the consumer discretionary place, Caesars has been down really near a 5-year low. Norwegian, all of these have had their earnings estimates cut rather dramatically. So the damage is already happening in the market, and all we're waiting to do is sort of spread out into other areas like technology and communication services. Finally, I was asked a lot about what this 20% decline actually means. I just want to show a technical number here because the high that we hit a little while ago was 61.44. The February 19th high was 61.44. This is the closing high. This is how S&P Dow Jones does this. So to get 20% below that, we must close at 49.15. There's your magic number. And this comes from S&P. So again, it's closing numbers, not intraday, that actually matter in the long run. And to have a true 20% decline, we need to close at 49.15.32. Obviously, we're a little bit above that. But this morning, we were essentially sitting right in that particular neighborhood. So there's your game right here. 20%, we're essentially sitting there, and hopes, maybe some vague hopes, on not a lot, that maybe the Europeans will negotiate.
One thing that I think is so stunning is how wrong all the macro traders and the forecasts were going into the year. Remember the popular trades? Buy stocks, really bullish on the Trump growth agenda. Sell bonds because it's going to be a little inflationary, and buy the dollar and all these tariffs. All three of those have gone completely wrong in such a short time period, which I think makes this worse.
Well, we have talked for years how bad forecasting is with strategists and analysts, but here's something nobody could have actually forecast. I wouldn't hold them against them for getting it all wrong on this one.
This was unmodelable.
They get a pass on this.
It's just causing a lot of pain.
Yeah.
Speaking of pain, though, we are, as Sarah's mentioned, well off the lows. In fact, we're up on both the NASDAQ and the S&P. Not nearly as high as we were on what were those erroneous headlines earlier about a 90-day pause, but nonetheless well off where we were when we opened the session only an hour and a half ago. Feels like a full day's already taken place. We got a lot more live market coverage for you straight ahead.
So, yeah, I mean, that's why forecasting is just, I feel, a waste of time, because you're just never going to know. You're never going to know what the future holds, and that's why making predictions is one thing that I will never do. And a lot of investors like Howard Marks and Peter Lynch would agree. You know, economic forecasts are very rarely correct, and the key question is consistency. I'm going to wait for a couple more minutes. I think we're going to get some statements, some updates from the administration from Washington, at 11 a.m. They were supposed to talk, so we'll see if he gets some coverage there. If not, then I'll share that on our Discord. But if we are hearing something from Washington, then I'll be live streaming that as well for the next couple minutes here as we see. So, Emmett says Tom Lee screwed us all. Yeah, I mean, he's had obviously a very, very bullish view on the market. So can't blame him for having that view because, he's permeable, right? He's been very optimistic about the markets, very vocal about his thesis over the long term. But yes, again, forecasting or predictions just are never consistent. Powell is speaking today. I don't think he is. I don't think he's on the calendar for today. I'm sure we're going to hear from Trump today at some point. But yeah, it just feels like it's been very, very exhausting. It's been draining over the last hour and a half. It's so much volatility. There's a complete disorientation of these markets. So crude oil prices, $61. We've got volatility here back at 45.5. We saw the volatility drop, get back up, and then slightly lower once again. And we've got the markets here green. So it is possible that we continue on that trend of the study that we talked about over the weekend, where 2 back-to-back red days of 4% or more have led us to a third-day rebound. Of course, the third-day rebound has been a lot stronger than this, and at one point looked like it was going to be that, but cold water came in very, very fast. So Malta says, I'm entertained. Of course. Who isn't? Who isn't entertained with this market? And to be honest, like, I'm trying to buy more. I'm trying to send out more orders and buy as much as I possibly can with every dip, with every kind of selling pressure. Been a little bit more risk on in terms of leveraged positions. So picked up a little bit of TQQQ today. We'll buy more of SOXL. Again, these are leveraged plays that I'm comfortable with. So everyone has to do their own risk analysis, their risk tolerance, what they're comfortable with. But
8% from the low to the high today. That is the largest move since March.
I'm just going to see if they have any news from Washington. If not, then we're going to end the stream and then do it another time. But let's see if they have any updates.
On these reports, the president was considering a 90-day pause in tariffs for all countries except China. The White House now calling that fake news, but as we pointed out, haven't revisited the lows of the session. Dow's down 230, S&P's still mildly positive.
It shows you a few things. One, there's been a lot of damage done. Two, the market is desperate for any kind of off-ramp or signal that the president is open to negotiating or pausing. I mean, Peter Navarro pretty much shot that down this morning on Squawk Box. The president himself shot that down last night. And even in the face of the big market plunge and all the recession forecasts going up, the president said we need to take our medicine. So not only not capitulating, but actually digging in on this tariff policy. Let's get straight to Eamon Javers at the White House for the latest on what we are actually hearing, Eamon.
Yes, Sarah, that's right. Important to separate what we're actually hearing from real sources from, Twitter nonsense. But look, here's what we can say. Kevin Hassett was on Fox. He's the National Economic Council director earlier today. The anchor person on Fox asked him if the White House would consider a 90-day pause. And then here's what Hassett replied. We have the text here to show the exact answer of what he said. He said, I think that the president is going to decide what the president is going to decide. So that's not a no, and it's certainly not a yes. That is Kevin Hassett punting on a question that he didn't have the answer to. Why didn't he have the answer to it? Well, because the president, as you've said, Sarah, has been suggesting he's not backing down. He's doubling down all throughout the past 24 and 48 hours. But there's always the possibility with this president that he could change his mind at a moment's notice. And so Hassett had to leave open some kind of possibility rhetorically that might happen. So he said the president's going to decide what the president's going to decide. That is a much, much different thing than saying that the president will consider or is considering a 90-day pause. And that's why when we were able to go into the West Wing, talk to officials here, Caroline Levitt called me to say that any reporting that there is a 90-day pause under consideration is, quote, fake news, unquote. The White House wants to make it very clear now that the president is not considering a pause. He is full steam ahead on his tariff agenda, guys.
You know, this has been a president that listens to business and engages with business and talks to business, which is all a good thing, you know, going in. Over the weekend, I know he was at the Live Golf tournament, but what sort of communication did he receive from people that he trusts? And is there any sign that he's listening to them? Because I can't imagine anyone in the world of business or investing is on board with this.
Yeah, that's a really good question, Sarah. And my sense is that he did talk to some people in the business community and on Wall Street over the weekend, but I don't know who he spoke with. And I'm trying to get a list here of some of the prominent people that the president was on the phone with over the weekend. We just don't know as of right now. And we also don't know the identities of the 50 countries that the White House says have called looking to have some kind of negotiation here. We don't know which countries are involved in those negotiations to the extent, or requesting a negotiation to the extent that any of them are. We just know that the White House has said that they are. So who is he talking to? Which heads of state is he hearing from? We don't have any of that information. We will see the president later today with Bibi Netanyahu in the Oval Office and at a joint press conference, which I'll be at later this afternoon. So we will have an opportunity, I think, for reporters to get questions to the president, for him to comment on this directly himself. And that's the best indicator, you know, what the president says and his mood.
Yeah. And the reason I keep bringing up Israel as an example is because it'll be interesting to see if they can make a deal. Because Israel is an example where it's our friend, our ally. We put 17% tariffs on them. They came back and they said no tariff barriers from Israel to the United States. So if there is a negotiation to be had, you would think it would be with a country that is willing to take away all of the trade barriers. So that could be the litmus test.
Israel said zero tariffs before the president put the tariffs on, and the president put the tariffs on them anyway, right? So what you heard Peter Navarro say on CNBC this morning is it's not just, in his view, about getting down to zero tariffs. It's about going below that, because this White House sees what they call non-tariff barriers, everything from a VAT tax to dumping to any kind of currency manipulation. They see all of that as part of an aggressive trade war. So what they want from countries is not only to go to zero, but to eliminate all these other things as well. Is that possible politically, economically? You know, your guess is as good as mine, but it's certainly not possible anytime soon.
Well, it'll be interesting to see if he can do it with Bibi, because that's, you know, they have a good relationship. You know, they've negotiated before. I wonder if he can do that. That would be a good test to see if he can do it with others. Thank you, Eamon.
Yeah, we'll see today.
Keep us posted. It's fast moving coming out from the White House and moving the markets here. With the NASDAQ still positive, let's turn back to the markets and all this volatility. CNBC senior markets commentator Mike Santoli, we sort of rallied into that erroneous headline and have maintained.
All right, everyone. So that's going to be it for me today. For now, you never know what's going to happen in the next few minutes or an hour or few hours. I'll keep you guys updated as best as I can on Discord, on YouTube. I'll try to be live as many times as it takes to bring you the best, most highest quality updates and information. So make sure that you drop a like and subscribe to the channel. Again, if you want to join us, Discord link is going to be down below. Our engagement is through the roof. We've got so many people now, and it's getting absolutely crazy with the level of volatility here to handle. So thank you so much and appreciate you all. Happy investing. Stay safe out there. I'll see you all.